Does anyone want to introduce themselves? Has a need, want, question, answer, anything they want to bring up? I'll leave the floor open for a minute.
I have a question on the Google sheet. So what is the difference between an asset manager? Well, I know what an asset manager is, but a project manager, how is that different?
Great question. Project manager, at least, again, those words can get jumbled up. I view the difference as asset manager means I'm making sure this property goes from what it is today to the pro forma we projected it in X time frame. Whether that you're the property management company, you're making sure the rents are up to date, leases are I's are dotted, T's are crossed, funds are in. Project management is the construction side. For example, this 18 unit I'm talking about in California, the 100 or sorry, the what deal is it? 48 unit I'm working on in Atlanta. Those have heavy rehab. Like the rehab is a third of what the acquisition price is, it's not more. I want one person whose sole job is to worry about that. If I have an asset manager trying to worry about the current tenants and getting those expenses dialed in, worrying about the process and the project itself, plus, hey, go manage a contractor to get 10, 12 units overturned in a timely manner, that's not realistic. And it's a little risky. Like, I personally don't want one person doing that much. And what happens if that person is just like, screwed, I'm leaving. Or I'm fed up, or I'm tired, or they, you got to prepare for it. But what if something happens to that person? They're controlling so many like parts of the business, because multifamily property is a business. Increase income, lower expenses, manage it right, don't sink the ship. You have a business. And when you're doing all that, I don't think we should have one person on it. Now, obviously, if it's like minor rehab, not crazy uplift, and the real value is in the asset management side of making sure your expenses are lower, bringing rent up, but the property still looks good. Okay, then a project manager might not even be needed. And they're not doing that job for the entire life of the deal either. You're hoping the asset manager isn't doing the job for the entire life of it. You've just kind of built a system and built it up to speed and like kind of put the right processes where your check-ins become less often. You're maybe going from once a week, twice a week to once every 2 weeks, once a month eventually. Or I wouldn't go more than once every 2 weeks, to be honest. But remember, it's the life of the deal is 5 years, let's say, maybe 7. You want to be able to do other deals. I think is the simplest way to put it. Like if I'm an operator and I'm managing one asset, I don't want to run the entire cycle and not get anything else. Which is kind of the system we're putting in place for this 120 unit. Is we have one person who's done this multiple times on hundreds of units, teaching the rest of us who haven't. Then phase him out and then have him work on the new property we acquire while we run the new one or the existing old one, the current one. So we take that over, the resource and the senior will always be there as a guide. And then you shift and then you phase out and then you keep going. And eventually you do that so you accumulate multiple deals in a year. Like, I'm sorry, if your goal is to do one deal a year, increase that. Like, unless that one deal's 500 units, then my goal my first year was 500. Am I close? No. Well, possibly. This year could end well, but was I close from when I started and made that goal a year later? Absolutely not. No chance. But your goal shouldn't be to do one deal. That's just my opinion. I love the question though. I should mention that more than I probably do. If ever.
No, that's okay. You kind of you also gave an analogy, so that's good.
It's a great question though, because it is important to know the difference in the roles. One thing I want to say, and I said this on yesterday's call, so whoever was on there, I'm sorry, because I warned you, I'm going to say it again. Who here thinks underwriting is the only way to get the seat at the table? Like, if you do just that, sorry. Like, if I underwrite a deal, I have a seat at the table.
Oh, but I've seen it happen, but I do think underwriting is a really important skill.
100%. I agree with that. But when I say seat at the table, are you going to get GP equity out of just doing that? I only underwrote. Obviously, if you do other things, that doesn't count because you're doing other things. But I think you should really, every person and every task that they do, for example, on the what is your superpower? Acquisitions, capital raiser, project manager, asset manager, and buyer. Did I forget anything? That's basically all of them. Any of the different tasks you could have, loan sponsor, whatever role you're gonna have a seat at the GP table, every single one of those people are gonna know how to underwrite. Because I'm gonna be honest, I don't care who it is, I'm gonna do my own underwriting. Always. Doesn't matter if Grant Cardone walks in and hands you a deal and say, what do you think of this? If you don't do your own underwriting on it, I think that's a massive mistake. If you want to be a part of the GP team or hold any position or even raise capital for it. Because at the end of the day, I think on capital being the most, they're all important, but capital being the biggest one is if you're asking other people to put their money and they're trusting you. Personally, I'm gonna be honest, I think a lot of times they don't necessarily even care about the building. They may care location or size or what the strategy is, how much rehab it needs. Like those may be some criteria. They're investing in you because they trust you. They have a relationship with you. So if you're a capital raiser and you don't know how to underwrite and you don't underwrite the deal yourself, you're just trusting the people that did and hoping that everything else goes right. A lot of questions we get from anyone who's like coming on board to help with capital side is who's the operator and give me a couple of days I need to underwrite it myself. Those are the two most important parts and questions you'll get with investors. Who's managing my money? Because the most important thing to investors is not necessarily making money on their money, is not losing it. That's the worst thing in the world. If you ever talk to any investor, business owner, multifamily, capital investor, whoever it is, any investor, the worst thing you can do is lose money because it just means you blew it, kind of.
I'm sorry, what's the worst you can do? I couldn't hear you.
Lose the investor's money.
Yeah, your sound kind of like low, breaking up.
Yeah, so it is lose the investor's money.
Lose
So-
investor money. Okay. Yeah.
You have a 5-year window, you've raised $5 million. Doesn't matter what the price is, what the unit count is of the property, you better return that money in the time you set. If not, have a good reason why you're not doing it in 5 years, but say, hey, we are working towards getting that return. Because the bare minimum, you should break even, in my opinion. Like if everything goes wrong, you should be at least break even. Especially if time elapses, because you're hoping it appreciates. But that's my take on it.
What
And
would
most of-
people do? What would people, sorry, what would people do if they're about to lose people's investors' money and they're freaking out? And like I've heard people 6 weeks, they're just crying their heart out, you know. What is it? How do they recover? They talk about it, but they don't tell us how they recover.
Sometimes they don't, or it's soon enough where they haven't yet. Or you find other places to get the money and you pay them back. You're not obligated to by any means. Any investor
Right.
that thinks you have to pay him back is mistaken. Should you want to? Of course. You're gonna do everything you can too. But at the end of the day, if the
Mhm.
trip's back that way, what was that one big one? I actually, okay, here's another plug. Go to the YouTube channel. I remember we had an episode right when that Houston foreclosure or that big multifamily group that went kind of just walked away from the property and said, too bad, so sad, sorry everyone, we were out, and just pulled the plug because they couldn't operate it, they over leveraged, like a lot of things went wrong, and the YouTube video will go more into detail of it. But definitely go back, watch the YouTube video with the guys. I will pull up the YouTube. Sorry, I'm trying to do like everything at one time. So I will find the YouTube page and link that in as well. So you guys can find it. And if I actually find the video itself, I will put that in here too. So while we're talking, I'll look for that. I still find it awkward when I search or pull up the YouTube page and I just see a picture of me on one of the thumbnails. I'm like, not do that, guys. But anyway, Yeah, so I'm gonna find that video and I'll post it, but it does suck. One, for example, I think this is what someone told me recently. One deal won't make it for you in this business. One deal can kill it for you. It's like trust. Like you could take years to build it, seconds to lose it, right? And that's essentially what it is. If you've lost people's money before, it's very hard for the next guy or next group of investors to be like, yeah, of course we'll trust you with the money again. Tough sell. And reputation is a lot of things in this business. So that's something to keep in mind as well. That is a good question though. Thank you for that. Any other questions?
You know, I missed yesterday's. How can I, did you record it?
Yeah, so that'll be on the YouTube page as well. So every video is posted on the YouTube page. Let
And
me
we
share.
just go to Multifamily Freedom Chaser.
Yes, but I'm also gonna post a link in the chat to make it easy for everyone. Voila. So you guys should be able to see it there. And every call's on there, from the Sunday calls, Monday through Wednesday. Doesn't matter the day of the week. If it's on this platform and we remember to press record, it's in YouTube.
Mhm. Thank you.
Yeah, of course. Cool. Any other questions?
So I have a question.
Sure.
I'm aware of an operator who, they underwrote a plan, a business plan to add value to a property. And then once they got into the property, they did not implement the exact value add, like your, let's just call it your template, right? Because there's that replace the carpet with luxury vinyl flooring and do, stainless steel appliances. Like there's this, what they call standard, right? So this operator started putting, instead of, let's say, luxury vinyl flooring, linoleum, and just much lower scale. Obviously, because they couldn't get the money out of the rents. They saw that once they were in it. So there's one thing to like underwrite it thinking that, it's a perfect case scenario. But do you know of any operators who went into a deal and underwrote it, like with the value add, but just could not implement it at all because they realized they could not, realize the rent increases that they thought they could? Are you aware of any like that?
So specific operators, no, I wouldn't be able to tell you off the top of my head right away. I'm sure it's happened before. Where I would say is there's two things about the multifamily escrow period that are very different than single family. One, length of time, and two, how in depth you go. For example, 120 units, I don't care if it takes a week. We're walking every single unit. Person could be out of town, we'll come back. I don't care. There's no excuse. We're checking sewer lines, we're checking roofs. There's 25 different buildings. They're all getting checked. Doesn't matter. No stone, like the old mentorship I was a part of, they would say if you don't check every unit, the one unit they're not showing you could not exist.
Right.
What I mean by that is, what if you walk in and every wall is removed? Like the place is gutted, but they tell you there's a tenant in there. Unless you physically walk in, I don't care what anyone tells me on a piece of paper. You can put your cousin's name on there. You could say that you're paying this much rent. You can open the door and there's not a wall in sight. Who's to know? Who's to verify? And once escrow closes, too bad, so sad. You're stuck with it. So I do understand how you can calculate rehab, for example, or the value add. But if you walk every unit, you get a quote from contractors, multiple bids, and you do your homework and you have inspection reports and you do a thorough due diligence. You do a rent stack, which I think is big. And I'll get into that a little bit. But if you do all those things and have the appropriate buffers in place for each line item, I'd be really surprised with like being so far off, At that point, it's like, how much homework did you do on the property?
Right.
So that would be my initial concern with that. It's like, so how much do you really know about it? Like, what are you offering based off of? For example, this Atlanta deal I'm working on needs a massive rehab. Initially, we thought it was like, oh, maybe $400,000 rehab budget. My buddy went and walked the property. He's like, triple it. I was like, okay, I guess we're tripling it. You know, and
Will you still be able to get financing with that much rehab?
the seller carry.
Oh.
Yeah.
There you go.
Actually, that's a great point too, actually. And I think Jerry, who's here, thank you for being here, Jerry, can answer this better than I can, but I can just say this much. Your lender needs to know, the person who's funding your deal needs to know all these things as well. They're not just gonna hand you $7 million and be like, yeah, I trust everything you're saying. They're gonna, our inspection for this property is coming from the assumable debt, and their debt's locked in, like they've been locked in. They're not going anywhere. They're the ones sending the inspection report. So it's like completely out of our control. But we're obviously still gonna do our due diligence and do our homework, but the lender's sending their own guy. Usually they send an appraisal, they're doing a full inspection. Like, you have to remember this, like the people giving you the money and fronting it on the loan side, whether it's old debt or new debt, they're gonna want to make sure there's investments secure not only for the people operating, which would be the GPs and hopefully you guys in this case, but also that the property is what you say you are buying. There you go, Jerry put it the best. This is why I love when you're on these calls. Lender can be your best friend on a deal. If the lender says no, we can only lend you X dollar amount, they're not doing it because they're being mean or because they had a bad day at the office. They're doing it because they believe that's all that they can put on this deal. No bank ever wants to lose money or lender. It's just not happening. Anyone's in the money-making business, it's them, first and foremost.
So what would you do if the seller was not carrying it?
In my situation,
Mhm.
I probably wouldn't buy it. And
You
knows
wouldn't
that.
buy it. Oh, you hadn't put down like AEMD or anything. Okay.
Oh no, we still don't have the EMD set. Like we're not even close to an accepted offer. But we're throwing it out there where it's like, if I had to get a loan, and mind you, they're also at 60% occupancy, so 40% of the units aren't even occupied, which is another issue. I don't even know, and again, Jerry can chime in. I don't even know if a bank would lend $1 on this, given the condition, how much work it needs, how
Still in the
little
process for you, I see.
yeah, most of the time, and if they were, where are you getting the rest of the money from? I have to come down out of pocket. It's not worth it for me. And it's not about the percentage down. It's if I have to come down 75% on the deal, call it 3 million. I'll just go get 80% loan or 70% loan, put 3 million down and triple the property capital that I'm investing in. And my returns and everything's exponentially more. So at some point, it just becomes not worth it. That's the one drawback of assumable debt, in my opinion, which I'm a big fan of in the right situation. With an assumable loan, you have to be careful of how much is leveraged. The assumable debt is only 55% of the purchase price. Where are you getting the other 45 from? You have to add rehab to that. You're almost in skin in the game 50%. That's not nothing.
Yeah, and Edward, when
Yeah.
you're looking at bringing a lot of money to the table and you're 50%, it's really going to kill your cash on cash or your cash on cash for your investors. And you got to look at it from your investor's perspective. If you're coming back with like a 2 to 4% cash on cash on a real estate deal, they can do better than that just buying U.S. Treasury right now. So they get 4% on a U.S. Treasury bond, and and it's not as risky as investing equity into an apartment complex. So you want to make sure that you're buying these where you're bringing your investors a good rate and making it good for them. So
Absolutely, and
More
actually
than 4%.
yeah.
And I love that point too, Jerry, because remember, even though you think it's a good deal, this is where knowing your investors and knowing where you're finding the money from is so important. and obviously this is an experience thing too, because you have to have gone through it to really know what that feels like, is sure, it may sound like the best deal in the world to you, but it doesn't make sense for your investors. Here's another thing to keep in mind. For example, with that 60 unit occupancy, 40% vacancy, and needs $1.5 million of rehab. Those units are sitting vacant until you do the rehab. That's not happening overnight. You know, on paper, it's like, okay, I start at this, I put the rehab in, and I finish at this, and this is what my total rent is once it's all said and done. Yeah, but how long does that take in between? Two things are not going away: your debt and time, to be fair. If you tell your investors, hey, I'm gonna have this done in 5 years, but you don't finish the rehab in, let's say it takes 2 years, those last 3 years, you really need to make sure you're stabilized, everything's checking out. Because remember this as well, and Jerry, I think you can input, I would love your thoughts on this. The bank wants to see consistent rents before you can even refinance, possibly even for someone to sell or as a buyer. Like if you do everything, your property's beautiful and everything's running smooth and it's been a month, you're not selling it right away. No one's gonna be like, great, this is consistent numbers that I can rely on. For example, because I don't have enough things I'm dealing with, I'm looking to invest in a business. The last 2 months look okay. Previous 4 look terrible. What do you think my thought is? Oh, yeah, I wish that 2 months was a little more consistent, like more like 4 months. If I'm looking at a 6 to 8 month window, right? It just looks bad if the only good time of a property is right before you're about to sell or you listed it on the market. Doesn't look good.
Mhm.
One more thing I want to address. There was a question: how do you deal with bankruptcy? Do you underwrite the same? Can you please either get off mute or elaborate in the chat what that question? Because I'm not exactly sure what that question is referring to. Are they still here?
So are they,
Oh, they
I'm
are.
trying to understand the question. Are they wanting to know, like, if you have a bankruptcy or if the property is going under or what, you know?
I haven't. Yeah, that same question. Well, I guess I can just address it both ways. If you have a bankruptcy and trying to get a loan in multifamily, find another person to sponsor the loan.
It might be, the question might be from a buyer's standpoint, like how do you underwrite a bankrupt property?
What is
Like
bankrupt?
foreclosure, maybe foreclosure?
So here's okay. So the best way I can answer that is that has with foreclosure and multifamily, or like I guess being under, and like I guess this has to do with the Houston thing where team just walks away and basically they underwrote it improperly or overpaid or whatever the case is. They're over leveraged and their debts are too high. At the end of the day, you offer what you can pay. The bank is going to sell for whatever they can get for, or whatever entity holds that title now. Because remember, they're not in charge anymore. Also, that debt has nothing to do with you. All you can do is, I'm going to put my best foot forward. I don't care what they bought it at. I don't care what the bank has it for. This is what I can offer. This is what I love about multifamily, that single family, sometimes it's easy to get this mixed up, is there's no emotion behind any offer. This is the offer. This is what we can do. Now, can you get creative and get a little clever with how you put the deal together and the structure? Always. That's my favorite part of this whole game. But at the end of the day, if you can only offer X, Y, and Z, one, be able to back it up and explain it. Don't just say because I feel like it. If you can say because of X, Y, Z, these are the rent numbers we got. This is how much rehab it needs. These are the quotes we got. This is what the debt looks like. This is what the lenders' rates are today, which is ever evolving, and obviously I think recently went up too. You can only control what you can control. If I want $2,000 of rent for a specific unit mix in a city, but the city doesn't warrant that and doesn't hold that, and I can only realistically get 1,500, me trying to fit a square peg in a round hole is not going to change that number. Like, you own one building in that city, you are not going to change the entire landscape and asset class. It's just the reality of it. And again, Jerry can touch base kind of to what he mentioned in the chat. The lenders are going to protect you from that too.
So
Yeah. Oh, sorry, go ahead.
no, you're the expert. You go ahead.
Oh.
I'll say my comment after.
No, yeah, as far as the lenders are concerned, when we're looking at long-term debt, through Freddie and Fannie, they're looking at the history of what the property has done. And we'll go back 12 months usually. But we can look at the 12 months and we'll take the last 3 months and we'll say, has those last 3 months gotten better than the previous 9? Or have they gotten worse? And we'll underwrite accordingly to that. So if it's gotten better over the last 3 months than it was the previous 9 months, we'll take those 3 months and multiply it by 4 and use that new NOI that way instead of, but if those last 3 months have dropped off or the last 6 months have dropped off, we're going to take numbers off of the NOI that you would have had from the early 6 months, when we're underwriting. And then when we're looking at things that are not stabilized, it's really hard right now to get funding on deals that are not stabilized. We're working on a deal for a flagged hotel in downtown Denver. I mean, beautiful property, but their NOI was down this year, and we're trying to refi, and we're coming up $2 million short on what they need to refi out of an adjustable rate that they're in. And so we're going back and forth with lenders trying to get them the money, and they're working up pro formas with different management companies trying to say, hey, this is what it's going to be. This is what it's going to be. And the lenders are saying, why hasn't it been that way already? And I mean, these are big guys that own a bunch of hotels, and they're still not budging on what they're wanting to lend on this deal because of the history of it, and they're getting more and more stringent. I mean, it's good that lenders are still looking at deals, because when they stop looking at deals, they stop trying to figure deals out, trying to help people with deals. That's when we're really in trouble. But as long as the lenders are picking up their calculator and trying to figure these deals out, and they're trying to make them work, things are going to stay pretty stable. But that day if we get to that point, in that day where it stops, where they say, we're done right now, that's when it'll get real bad. But
It's like
right
the friend
now,
who stops checking up on you. It's like the friend who stops checking up on you. If they stop checking up on you, you have to be worried.
Yeah.
Checking up on you is because they care.
But the lender's not going to let you get into something that they don't think you can handle. So,
and to be honest, that they don't think the property's projections can handle.
Yeah.
Like if you keep saying, "Oh, I can get 2,000," the lender's like, "No, you could get only 15." Sorry, you're gonna lose that fight every single day of the week. And to another point with that, and I know you had a question, but real quick, that's why understanding T12 is so important. On an assumable loan, the bank is questioning us on the T12. I'm like, you already had a loan. If we didn't come in, you're gonna be stuck with this anyway. But they're giving us a hard time because they want to know if they should continue too. They're not only requalifying us, they're requalifying the property, which is crazy because like you think, oh, I have a loan, I'm okay. Not necessarily. Like you still need to hold your end of the bargain. Like this isn't just I'm in the mood now, but tomorrow I might change my mind. So that's why it's important to understand the T12, get the accurate T12 and cross-reference the information. And that's why we have practice going over it as well on the Zoom. I'm open to doing it again next week if you guys want us to. So feel free, if that's something you guys want to do, let me know. But yeah, Anna, go ahead. You had one more comment.
No, I was just I think I have a comment and a question for Jerry. So the comment was that Houston deal worked until the interest rates increased, and then they got caught in that, not having they had a floating rate loan without like a cap rate, and so the numbers no longer worked. The interest rate hike eroded their NOI, so then it was no longer making money or cash flowing. So that's the problem with that property. So in a bankruptcy, you would underwrite to what works. Your numbers have to work. So And then that's what you would base what you could pay for the property based on your numbers working. Whatever you set your numbers for the cash on cash return, the IRR and the AAR.
Yep.
But Jerry, I have a question for you on, so we underwrite our own properties. We underwrite our own deals, right? And then we take it to a lender to try to get funding. Can you discuss what that underwriting, because I understand you guys as brokers underwrite the property. Do you kind of underwrite it the same way we do, or do you do a different set of underwriting?
Yeah, we underwrite usually a little more conservatively than others do when the lenders always underwrite a little more conservatively. And especially me as the broker, I deal with, I've got 7 or 8 that I deal with regularly, but I've got about 50 to 60 different lenders in my pocket that I use and I go to for different things. And I try, when I'm underwriting, I try to be even more conservative than they are. So when we go to them, when you like what I bring to you and things, and and then we go to them, I like them to be able to surprise you and make you even more happy, when you see their numbers. So right now, I mean, we're underwriting deals, through Freddie and Fannie, 6.5% to 7%. And I told a borrower on a refi that we're going to be at, I think I told him we're going to be at like 6.6. And we just put him under contract last week for 6.3. So, when I'm underwriting, I'm trying to get, I don't like to come to somebody and give them really good numbers and things like that. And then the next day when we go under contract and it not to be what I say, I'd rather it be better than what I say. And sometimes I lose deals that way because somebody else might be going the other way of, hey, let me get this person's name on the line and we're going to go ahead and get their name on the line. And, if it changes a little bit, no big deal. To me, I always want it to change for the better. So,
but part of your conservative underwriting, do you underwrite with like a certain vacancy percentage, like let's say 70% or 75%, or do you underwrite assuming an interest rate is higher than it really is, or that the DSCR is a certain number in order for the deal to work? Can you just talk about like your kind of benchmark numbers?
It's different with every type of deal, like depending on the deal. Like the hotel I was talking about is totally different from a multifamily. But on multifamily, depending on the population, depending on where the property is, who the tenant base is, all that, you're going to have to underwrite to different DSCRs. We just did one in Houma, Louisiana. The average vacancy or the average occupancy in that town is like 78%. This place that we were underwriting, they had like a 97% occupancy, but we underwrote to a 90% just because the minimum we can go through Freddie and Fannie is 90%.
Right.
You have less than 90%, we can't fund a deal. And then also in that same town, we can't give a better DSCR than like a 1.45 because it's kind of, because it's got the low occupancy and different things that are concerning to the lender. But if we go and we're in this, in a nice
cap rate too.
What's that?
You factor cap rate too into that equation based on location.
Well, the cap rate doesn't affect the loan amount. I mean, we're looking at loan amount and we're looking, at the DSCR is our big number we look at. The cap rate's more for the investor. That spread between, what we're lending and what they're paying is almost doesn't matter as long as we get, our 20%, skin in the game, we're in good shape. So
you brought up a few good points. One being my first point, everybody's going to underwrite. So make sure your seat at the table is secured by just being more than an underwriter, because look at how many people are underwriting before you even got a loan quote. You've had how many people underwriting. So that's something to keep in mind where, again, bring more value than just being an underwriter, because that's not That's a great, it's something everyone should learn how to, everyone should know how to underwrite. But that's not gonna get you, that's not the only way to get a seat at the table. Or can't be the only thing you do to get a seat at the table, I should say. The other point you made as well, that's I've said, and we said on multiple calls throughout the community, it's really important to know your market. The vacancy across the board, not just your building, the vacancy percentage, the rents, like what you can bring it up to, what the asset class is, and like what's that ceiling look like, what's normal for the area. Honestly, even as far as knowing what your expenses are will help, because that way, if there are any discrepancies on the T12, you can at least speak on it. And you can say, I've done research, I've gotten quotes on this, bids on that, X, Y, and the other, and then you and the lender work together. It's not a, hey, the lender said this, I hate them. It's, they said this, there's usually some validity to it, but at the end of the day, you have to remember, it's people on the other side too. Like, they may not have seen something you saw, bring it to their attention. You may not have seen something they saw, which is why you're not on the same page either. And they'll relay that to you. You just gotta have that relationship and keep that communication. Because you're not looking to do one deal or just get one quote. You know, you could, maybe there's a deal you bring and, for example, like Jerry was saying, there may be a deal that he underwrote aggressively and it didn't work on this one, but then you bring him another one and all this, everything falls into place and you get the best deal from, and it works out into perfect marriage. And that's what it's all about, you know? And I'm sure like Jerry, you can attest to this too. It's like lenders specialize in different markets based on the knowledge and people they know or people they know that want to be in that market. Those are big components of it too. So don't ever feel like there's one right answer and there's one way to do things, which is why I love the whole get crazy, get creative, throw out different strategies, tell people what you're doing. You never know who might know someone that can do something differently. I learned this in an escrow on a 6-unit here in LA. I was told 3 times a week of the escrow the deal is dead. Like funding's not gonna happen, we're not gonna meet the deadline, we're losing our EMD, everything that could go wrong did go wrong. I asked the right person, the right question, and we were able to close before the date, even though the title wasn't recorded. How did we do it? I have no idea. We should not have done it. To this day, the agent, the other agent, the lender, everyone involved in deals, like, I don't know how you pull this off. I'm like, I don't either. I asked the right person the right question. So make sure you put yourself out there. Talk to people in the chat or in these chats. Talk to people on the feed that are in a market you want to invest in or investing in that same market or say they're looking in that market. It's all about educating yourself. For us in the West Coast, I know like Anna, you and I are in California. Everywhere is far for us. So if we're not investing in California or in our backyard, it's not easy to get anywhere, everywhere for us. You know, there's some places you have a connecting flight, a long way, or whatever the case is. Make sure you have people in the area that you're looking to purchase in. Like Florida is on the opposite side of the country, but we have a team there. We have people who can get there in a few hours. Ideally, you don't get to that point, but it's like, hey, we have inspections booked and they told us this weekend. Guess who's gonna try to get on the plane ASAP? Me. Guess who's gonna be driving there the night before? Everyone else. So it's like, I have to worry about it now. They can worry about it the day of or the day before. Things to keep in mind. It's, what is it? If you don't prepare to fail, you're gonna fail, or fail to prepare to fail. You guys know what I mean. Like, it's all about preparation.
Yeah. Real quick, I was talking about the Homa, Louisiana. If you go from there, they were wanting Fannie and Freddie underwrite at 1.45 there as far as a DSCR. You go to Miami, they're going to be a 1.25, 1.3. It just depends on the area. And if you ever have questions about an area, you can reach out to me and I can talk directly to Fannie and Freddie and find out the details of what they underwrite to in any given area. So.
Can you put your contact information in the chat, please?
Yeah, for sure.
Thank you.
And that's
Hey, Edward, I have a question.
Go for it. Yes.
Okay. So I'm learning. I'm trying to learn all this stuff about multifamily. I'm a realtor, but just kind of like learning about multifamily. I'm jumping from being a realtor to this, like without going through the single family residential experience or duplex or none of them, right? So we're going to be talking about napkin underwriters. So when you said we have to know underwriting, do you mean like the whole detail of like a real underwriter does? Or napkin is going to be enough, or just a little bit and then have our assistant do it? Or do you think, and number two question is creative finance. Do we, because for me, if I continue the way I'm continuing, I'm like breathing this stuff. I'm honestly, every day I'm like putting 10 hours a day at least. Okay. So a year from now, if let's say continue doing this, right? I know I will, but to get the confidence, do I need to know how to do creative finance the way Pace Morby? I watched him during COVID. I learned, I took 5 notebooks of notes from him. But you know what? I never put it in action. And then I got into this multifamily. So I know what it's all about, but I haven't done it yet. Do I need to, like me or anybody else, do we need to just to get our feet wet? You know what I mean? Or just find somebody who knows those stuff, because it's all about confidence, you know? So I don't know where exactly to start.
Yeah, so on the underwriting side of things, I always, and when I say like make sure you know it and you can do it, napkin helps, but that's not really gonna cut it in regards to like knowing what the numbers are gonna look like. Like if I'm raising capital and I'm telling investors to ask, then you're gonna need to do more than just a napkin.
For sure.
So in that sense, it comes down to the next thing of what role are you playing? When I say make sure you understand like underwriting in general, and it's very important, maybe you're not the one going through every single line item, plugging it in, and that you've done that 100 times. Maybe you're not that person. But if I'm talking about every single line item, there's not one thing that you shouldn't at least understand, right? It's like, I'm not saying be an expert and master of the textbook, but know what goes into each line item. You don't have to be the one plugging it in necessarily. And some people may disagree with that. I personally think if you heavily understand every single thing on the underwriting, the only way that's okay is if you really have an underwriter next to you that you trust. Personally, I want to know everything. That's just me. If I'm putting money into a deal, if I'm operating a deal, if I'm managing a deal, I want to know the underwriting. Are there some people who don't do their own underwriting anymore? Possibly. I personally would want to do it myself. I recommend everyone else does too. But it is important because at the end of the day, you have to secure your own interest. You know, and then so I would say learn the napkin just so you get the understanding of what the different tools.
If it's a deal or not.
Yeah, if you should even continue. But
Right.
I would say if you're looking to do asset management, napkin's not going to help you. Just learn underwriting. You know, if you have someone that's going to be your acquisition person and bring you the deal, and you're just going to be on the asset management side of the business, and you're not necessarily going out hunting for deals, you may never do the napkin anyway, because that's not, you're going to see it after that step. So then I would say just learn underwriting and learn all the ins and outs of that, but make sure you don't overlook the basics. With regard to creative finance, in my opinion, creative finance is made to be much more complicated than it really is, because you're not going to try to do a million different things in the multifamily space, and luckily you don't have to explain them all. You don't, this is one line I use a lot. You don't stumble upon 120 units. You don't stumble upon 50 units. Okay, you may have inherited, that's just the one exception possibly, but you own those properties because you have an idea and you know what you're doing for the most part. Obviously, some know better than than others, but at the end of the day, you didn't acquire that and you're not in a position to sell by accident. If I tell you, hey, Mr. Seller that owns 100 units, I want you to sell or carry, they're not asking me what does that mean. And if they are, how did you get this property and like have it on the market? Or you'd hope at least the broker knows. that they can explain it to them. So on the creative finance side of things, it's helpful to know, and trust me, like I like it. I love the creative strategy behind it. But on this Florida deal, we're doing assumable loan and seller carry. Now, it's not exactly breaking the creative real estate bank and going through the weeds, and like it's not all the crazy tips and tricks and stuff that Pace does. But I guess it's creative. We're taking an assumable loan, we're doing a little bit of seller carry, we're purchasing X instead of Y to save costs in some places. So yeah, it is creative, but is it like worth 5 notebooks of notes? Personally, I don't think so.
Mm.
At least on this deal. There may be another scenario that you have something in that notebook that's like nail on the head, like, okay, this is amazing. And I'm like, all right, in that scenario, it worked out. But it really comes down to, it's like, where do you want to be in the machine? Like it's a conveyor belt, everyone plays their role. If one slips up, the whole thing gets held up. Make sure you know what role you want to play and learn under someone who's in that position. Now, like, I'm very big on the whole learn with hands-on experience. Mentorships are great. People spend a lot of money on them. I spent money on them. They're gonna meet great people. You're gonna have awesome resources there. But at the end of the day, there's nothing anyone can teach you that you won't learn by doing it yourself, or learning like in the actual deal. It's cool when someone comes up here and talks about their own deal. Like, I can tell you guys everything about this 120 unit. Some of you might be tired of me saying it, but at the end of the day, you're not going to learn as much if your hands aren't like, you're not the one there. You're not walking the property. You're not doing the asset management meetings. You're not on those calls with the property management companies. I think it's a big difference personally with doing the actual deal. And some people have even said, like, I don't even care if I get paid or a GP position, or I don't want anything. Let me be in the room. Some people,
That's what I want.
yeah.
So how do I find the right group of people that can teach me with, I don't even, expect money or anything, just to learn? What do you recommend?
It's ask people who are doing deals, ask people who, heck, I'm willing to go back to my team. Hey guys, there's some people who want to possibly just kind of hear what our conversations are like. Obviously there's a lot of details that go into that, and we would have to close escrow first, but I personally don't have a problem with you being on some of our calls. Like, it doesn't hurt me at all. So it's like, yeah, I'd love to give the opportunity to people on here. Now, is it going to be like, let's have 20 people in here with questions and stuff? No, but if it's like 1 or 2 people and we're having a call asset management, yeah, come in. If you want to see how, one thing actually I think is a good opportunity to learn, and like a lot of people do, is, has anyone been on any of those calls where someone is raising capital for a deal and they're going through what the deal looks like, why they're buying it, the location, all the, like, they're making it look like the prettiest thing in the world and the best deal ever on the face of the earth, because they're trying to get investors to invest? Go on those calls too. That's the best sales pitch you ever hear for a property, and you'll hear what points they're looking to highlight, so you know what to look for. Like, these are the areas of opportunities we're capitalizing on. These are why we like these. They're telling you everything they like about the deal, and they're fluffing this up to be the best thing on to invest in on planet Earth. That's an opportunity for you to know, like, if they're mentioning this to a bunch of people, they want their money essentially, then this stuff's important. Like, that's the type of stuff that I would look into. Stuff that are hands-on, places where you can go ask questions and people will respond to you. Like, I don't personally like going into those rooms where it's like 800 people and you can't even say hi without the chat blowing up and you can't keep track. Like, that doesn't help me personally. Especially in here where you need to be more hands-on. At least I'm better learner hands-on. Is, let's dive into it, let's do it, like, let's get our hands dirty. I want to learn. I used to do this more when I had more free time, but I used to throw out a Zoom link, people would get on the Zoom and I would just underwrite deals. And people would ask me questions. Like, and I wasn't using Napkin Underwriting, I was using the crazy calculator I had before.
Do you have videos of those?
I will have to look at my computer, because those are stuff that I did on my personal Zoom. and I didn't put them on YouTube, so I might have them in a Dropbox. I'll double check, and if I have them, I'll let you guys know. If I forget, please remind me. There's a good chance I'll forget. And it's like we say too on these calls, it's not just me, it's everyone. Like Zach, we got on a call, he's like, hey, do you mind if we talk for a half hour? An hour later, we're still talking. You know, those are the type of things where I like when you guys volunteer and ask questions like this. Like, I don't want to have to pick a topic and bore you guys about a topic that it'll relate to some people and it won't relate to most until you come across it, and then you remember to come back if you do. Like, these are the type of questions and stuff that you want to be involved in. Put yourself out there and like volunteer and ask questions, because at the end of the day, if you have a question, shoot the shot. Like, I've been in a mentorship where for 2 weeks I was the only one asking questions, so I know so much. I don't shut the heck up. Obviously, I'll ask a question to anybody. I don't care if it's anyone on a call or if it's the president. I'll stand up and talk. I don't care.
Thank you.
Yeah, so I definitely connect. Shoot me a text and we can talk more about like different strategies and stuff.
Okay. All right.
Go for it, Anna.
Is it Nagar?
Yes, Nagar. Yes.
If you put your contact information in the chat, I can send you an email to a link to a Saturday underwriting session. It's free.
Okay.
They walk you through underwriting.
Okay. Perfect. Here you go. I'm putting my phone number and email.
Is that
Thank
okay?
you, Anna. And do you have your contact information here too?
It's on my my name.
Oh,
So
find it.
to the point of the underwriting too, that's why we had 2 separate Zooms. So like I posted in the YouTube link, we had the napkin underwriting, and then Victor would do his Zoom. If we want to, we can add a 3rd one. There's so much you can talk about just on the underwriting side. It's kind of crazy, a little too much at times. Like, I'm sure on the debt side, Jerry, you mentioned it too at times. Like, these are things you just need to learn how to do. Sorry, today I actually didn't realize the time and we didn't get to do a napkin one, but obviously, like, we have the old ones I said on YouTube, and if you guys have a deal you need help with, and I always say do the underwriting first, reach out to us, and then we can look over it together. And like, that's the kind of that's how I like to do it personally. So I think that's the best way to learn. It's just by doing it. Like, you don't lose anything by underwriting a deal. If anyone needs a deal to underwrite, let me know. To underwrite, let me know. I have a year's worth of dead deals and underwriting in my drive that I still can't believe I have, just sitting there. So if anyone ever wants to practice, like, go on Crexy, go on LoopNet, get an OM, and have fun with it, and see what you get. Compare with people. Yeah, see, awesome. Connect, help each other out. I love it. Any other questions? Can't believe an hour's passed already. That's wild.
So with Ed, thanks for all the value today, as always, man. And I know you're heavy into this. So from your perspective, like when you're vetting out asset management companies to work with and align with, what would be like some advice to properly vet people out, and so you're aligning with the right people?
So real quick, I don't. This is kind of like the question we had earlier about asset management, project management. Asset management is a person that's going to be on your team as a GP. Your property management company is going to be the person you hire. Those are 2 very different things. Asset management should be like maybe they're skin in the game. You don't always have to put your like money in the deal. Most of the time it's recommended, because you do want to, like, hey, I'm putting back my acquisitions fee or whatever into the deal. But the asset manager you want on the GP team, and they're also known as like an operator, is sometimes thrown out there. They are the person who has to be the most qualified to do that, because they have control of the asset where all the money is invested, right? All the investors that put their money into the deal, that person is the one driving the car. If they don't know what the heck they're doing, that crashes, everyone's sinking. It doesn't matter, like, bottom line, like, they need to be able to manage the property management company. Property management company is your boots on the ground, day to day. They have one job, handle everything that goes into this property. Your job as an asset manager is to manage them. I don't care if the property management goes under and everyone walks away, asset manager has to figure it out. I don't care if the building collapses. Obviously, that's a different, like a bit extreme example, but a pipe bursts and the whole place floods. Property management doesn't know what to do, asset manager figure it out. There's no, I can't, I don't know, it's figure it out. Because at the end of the day, it's an asset that you're responsible for. You know, your car breaks down on the freeway, you don't just leave it there, walk away and never come back and buy a new car. You figure it out. You call a tow truck, you get it to a shop takes care of it, you pay whatever, you just figure it out. So asset manager manages a property management company. Best way to separate it is project manager. Like if you're working on the rehab side of the rehabbing the building and units, the exterior and whatnot, they manage the rehab. So you can call it contractors, let's say, if you contractor or subcontractors, whatever it is. Your asset manager manages your property management company. That's the biggest differentiation. A lot of asset managers come from property management background, not all. By no means do I mean all. A lot of them do though. It helps. But remember, the property management company has hired people for that, for like to handle your specific property, let's say. You didn't hire them. As asset manager, you're hiring the property management company and trusting who they put in place. They're the property management companies who's collecting like the 4 to 10%, depending on the city you're in, management fee. Now on the GP side, you also have an asset management fee, because the asset management is a manager or operator is the one who's putting them, is one of the ones putting the most hours into the deal once escrow closes. Like your job starts or doesn't end until you sell the property, to be honest. Like, sure, you can have a system in place where you cycle people in and out, like we were saying earlier, like I mentioned, but that's very like, hey, I'm still involved, my job's not done. I'm just making sure that everything's going smooth and it's in a place where, all right, it's almost stabilized or stabilized already, and I can just let it coast. I hope that helped with that separation.
Yeah, absolutely. Yeah, that made it very clear. Thank you, Ed.
Yeah, of course. Good seeing you as always. Any other questions? Go for it, Anna.
I do have like maybe a suggestion.
Sure.
On underwriting. You know what would be really helpful is, you know, so many different aspects of the underwriting process. The one basic one is just entering the numbers from the rent roll and the T12 and the maybe OM. But the more challenging part is that part where you're doing like the business plan, right? Like a hypothetical business plan. Have you ever considered maybe doing one of these Zooms on an aspect of that? That's not just transferring the numbers, but something that involves some thought that, you know, like a, you know, either whether it's implementing a value add or, you know, the idea of raising the rents, how much can you rent and raise the rent in today's environment, you know, these hypothetical situations that are part of that other aspect of the underwriting.
Yeah, so here's where like the name and whole idea of like where does napkin underwriting stop and where does it become more advanced and like what Victor will talk a lot about. That's where it's like that fine line. Personally, I'm open to talking to you guys about all of it. It's whatever you guys prefer, to be honest. We're just trying to add value. Also, I don't want to lose a bunch of people if we're too far away from too far away from what the objective of this Zoom initially was. But one thing we've tried to do, and we have kind of gone through a cycle with Will, Aldo, and I, where we would talk through each step of just the napkin and go through a rent roll, go through a T12, go through an OM, go through a mixed use OM, which is two completely different monsters, by the way. Once you add a little bit of commercial into it, the whole equation changes. Not here to confuse you guys on that, but just keep that in mind. Where if someone says, I have a mixed use opportunity, it's not the same. Like your leases are different, your income is different, what's covered is different, so much more reading, which I hate doing, but whatever. And then also after that, it's like, okay, what does my rehab look like? What is, how do I get the rent roll, the rent stack, and all those different things? So we do have those in the YouTube videos. And we did kind of go through a cycle of like, this is starting from the top of the napkin and going through it. We are probably going to go and recycle that and kind of go through that cycle again, possibly add some different things as well. I know Victor has a thing is with Victor's calls being every 2 weeks, because it's less frequent, it's you have those gaps where it's like it just not as much has been covered. I think I'm one of actually the first people to do these weekly calls. Like I've been doing the underwriting Zoom for a very long time at this point. I think Jerry, you started pretty early too, right? With your calls. So we've been doing this for a very long time. So I just have more content out there. That's just the nature of it. I know Victor didn't start his until a while after. Yeah, the veteran. This is a nice way of saying I've been doing this for a long time. That's funny. But yeah, and actually our old Zooms used to be in hour 45, 2 hours. So that's why going 10 minutes over doesn't sound like a bad big deal to me. But yeah, it's definitely something we could go through that cycle too.
If you've already done those, and I'll go look for them. I wasn't aware you had done those, so I'll go back and take a look at the YouTube videos and dig those up and take a look at those. So thanks for letting me know that you've done those.
Yeah, of course. And also I think this is like one of the biggest things that from just that question alone that I'm happy you brought up is if you're new to these calls, you don't know what we've done before. Also, if you're new to these calls, I don't know what you want us to do. So I love that you guys volunteer. I love that you guys are speaking up. I love that you guys are asking questions, and like these are my favorite calls. You guys, if you guys ever ask me what's your ideal conversation or Zoom, it's anytime we can just sit here and talk shop. Because I could pick a topic, discuss it, put on a YouTube video, and then we call it a night. But when like I get to have these conversations and we get the wheel turning and Mario gets to lay back and he's like, I've got this, I've heard this before. But I love it when we can just sit here and talk, because I feel like this is when you learn the most, is when you can have your questions answered, when you can volunteer and bring up other suggestions, you build that relationship in the community. At the end of the day, I'm one person and I don't know everything. I wish I knew everything, but I also like that I don't. Like I put myself in rooms where I know the least, you know, and I listen to other people. And by no means am I like, I'll be the first to admit, and this is recorded, so YouTube, this is going on YouTube. I don't know everything. I'm not going to get every question you guys answer right. I'm just going to answer to the best of my ability. If I don't know, I'll tell you I don't know. Or I'll try to find someone who does know. So I'll be very upfront with you guys on that. So I'm happy you brought up that question, Anna, because there is like, we have been doing this for a while and we don't know what you guys want and you don't know what we've done before. I don't expect you to sit through every Zoom we've done and have everything memorized. Like, I don't know what I've said on 90% of those Zooms anymore. Like if you ask me what I see on this day 4 months ago, I don't know. I don't even know what the topic was. Like, and when we do Zooms like this, especially where it is very fluid, there's no topic. Like, I don't know what they're going to name the title of the Zoom is, but I hope it's a good one. Like, if no one else has any questions, we can get this wrapped up. But you guys are awesome. Thank you for the involvement. Thank you for the participation. I love that you guys are like very volunteer heavy on days where it's just me. And thank you, Jerry, as well. I think he hopped off, but thank you, Jerry, in case you watch this, for helping out and chiming in. And you guys are awesome. Thank you for participating and spending your night with us. So if we don't have any more questions, please.
I thought we were going to do napkin underwriting tonight. Wasn't that the title of it?
Yeah, but we're 15 minutes over already, and because I'm alone today, I wasn't kind of everything got mixed up. Last minute things came up for Will and Aldo. So I kind of lost track of
Okay.
time. That's my fault. But luckily we've done a lot of these on the YouTube videos, so you guys can go back and check those out. If you guys want to talk underwriting, have a deal you're looking at and need help with it, like I said, reach out to me. Feel free to give me a call, shoot me a text, and we can connect and go over any deals you guys are working on, looking at, and strategize from there. And you never know, we might just take it down as well as a group. I think that'd be fun.
And we can find you on Facebook, right?
Yeah, if you're gonna message me on Facebook or add me, just please message me first, because I get a lot of random requests and I don't know who everyone is sometimes. So I will possibly like miss you because of the number of requests I get. So just please message me. And guys, that's not me flexing. I'm not popular by any means. It's a bunch of like spam accounts that just want to sell me something. So it's not even that great. So but yeah, that's it for me.
Are we gonna have another call next week? Or
I'm
is it on? Huh?
rain. I'm here every week. Rain, shine. I don't
Okay,
get hurt.
so every
I don't get
Tuesday,
nat-
same time.
Yeah, I don't get natural disasters here in California, so I don't have to worry about my power going out.
Mhm. I'm in California too, so
Yes.
yeah, Northern California.
Well, it's okay, we're taking over. You were on the same time zone, so it's easy to schedule calls.
Yes. Are you in the Southern California?
Yes, I'm at Anna and I from the same place, Burbank. So I'm in Burbank
Okay.
as well.
Oh, Burbank. Okay, I'm in
Los
Walnut
Angeles.
Creek.
Yeah, right outside Los Angeles. So I'm always gonna say I'm from LA just because it sounds better.
Mhm.
Oh, no. I think Burbank sounds better.
Yeah, people don't know Burbank.
Okay,
Trust me, I'm a diehard Burbankian. I'm not going anywhere.
The
But LA,
the airport put us on the map.
true. We have the best airport ever. Go in and out in 5 minutes. We've
Mhm.
completely gone off topic, and I love it. You guys are awesome. I'm gonna go have dinner. It's I'm okay. Thank
Anna,
you all.
could you please send me the message? Don't forget to send me the thing, information.
I will.
Thank you so much. Nice meeting all of you.
You guys can save the chat, so you can save the information or whatever contact and stuff. But I'm going to be logging out. So peace. Good night, guys.
Peace.
Thank you, Edward.
Take
Thank
care.
you, everyone.
Thank you.